Hey guys, in this video, I want to answer the question, will rising interest rates decrease home prices in the coming months? Guys, it's not a secret anymore. The Federal Reserve has announced that they're going to be increasing rates 3, maybe 4 times over the next year, and that has caused a lot of fear and a lot of questions of will these rise in interest rate increase or decrease prices, or will they stay the same? And we're going to answer that in this video. So I want to start off with looking at what Fannie Mae and Freddie Mac are saying in regards to interest rates and what their projections are over the coming months. They're expecting interest rates over the course of 4 quarters to go up. And if you average these out from these different organizations, we're seeing 3.3, 3.4, 3.5, all the way up to 3.7. If we look at actually where interest rates are right now, we're already at 3.55 on the 30-year. And we've seen that where they've been and how much they've increased. We can even, let's just pop out a little bit. That's 1 year's time. Let's just go over 5 years. We can see how much they've dropped since September of 18. They've dropped significantly, and we're seeing a spike up. How are new homeowners coming into the market that have never seen these higher interest rates going to respond to that? And is that going to cause home prices to go down? Now, the common belief is yes. As interest rates go up, demand goes down. Okay, so we have this graph right here, and what I've done is taken from 1990 all the way to 2022, and I've merged home prices and interest rates. And at a macro level, you can see something very interesting. High interest rates, 10%, low prices. As they've gone down over the course of over 30 years, interest rates have gone down, home prices have gone up. So we see at a macro level, yes, they impact home prices, and it's very common to make that correlation that if if interest rates go up, home prices will go down. And here's the psychology in that. So let's think about this here for a second. As interest rates increase, okay, as interest rates keep going up, the amount of buyers that may decide I'm going to wait will increase. And if more buyers wait, meaning they're not going to go out and buy a home, the demand could decrease. And if demand decreases, supply of homes will increase, because theoretically the same number of sellers are still going to sell year over year. You're going to see that same trend. So supply will increase, and as supply increases and competition amongst sellers increase, prices go down because sellers are competing for fewer number of buyers. And the opposite is also true. If interest rates go down, it's going to attract more buyers to come onto the market to want to buy something, which increases the number of buyers that are competing for homes. Now, if there's a bigger supply, well, they're going to start picking those homes, and eventually that supply continues to decrease over time. And at this point, I mean, we can see right here where month inventory is. We have, back in 2011, we had a 9-month supply of homes. We're down to 2.5, under 2 months of inventory. So you can see demand has increased in the market that we're currently in. However, interest rates alone will not affect home prices in a big way. Let me show you here. Let's go back to this macro graph. When we look at this at a large level, you see interest rates going down and we see home prices going up. But let's take a closer look. Let's look right here. We see this huge spike in interest rates. Right here, we go from 6%, 6.5% to over 8%. And that's a very short amount of time. Yet we see this graph right here, the home prices not really changing at all, maybe even increasing. Let's move on to close to 2000. we have a huge increase again in interest rates. And we see home values going up. Now, these gray bars represent recessions that we've experienced. So if you see this recession, we see them interest rates decreasing. So we can see that when the market is in need, decreased interest rates are given to the market to help get us out of a recession. You can see the decrease here, you can see it here, and this is back in the early 90s. We had one over here as well, and we saw a decrease in interest rates after 2020 with COVID. But you can see these spikes in interest rates right here. Here's one right here in 2013, it looks like, and we just see a straight up trend in home prices. So if this is the case, if interest rates can go up and home prices can still go up, there has to be another reason. And there is. The answer is the fear and the reason behind why interest rates are going up. You see, interest rates don't go up just because. Interest rates go up because they're designed to solve a problem. They're designed to manage the market. So the Federal Reserve manages the ebbs and the flow of the economy. They want to make sure that inflation doesn't go crazy. They want to make sure that deflation doesn't happen. And they want to make sure everything stays balanced. So they put things in place to try to keep the ebbs and flows of the economy where it needs to be. However, inflation is knocking at our door right now. Inflation used to be transitory just a couple months ago, they were describing, and now it's becoming a longer term problem. And the Federal Reserve has announced that they are going to increase rates to solve this problem. Now, solving the problem isn't a big deal. It's the fear behind it. It's the perception of the market on, do they believe that the Federal Reserve can do this? And if they're going to start increasing rates and they increase it too much, that scares people that want to put money into the market, whether it's the stock market or the real estate market, and it causes fear. And when people fear, people hold on to their stuff. They hoard their own stuff, and they don't spend as much money. Now, I do want to say that on a base level, if the Federal Reserve just jacked up interest rates 3%, so it jumped up to 6%, absolutely. You would see a huge drop in prices, a huge drop in demand. So I'm not an idiot here. I get the point that, yeah, if you increase something to an extreme, you're going to get that response. You're going to see home prices decrease. But that's not what the Federal Reserve is designed to do. You've seen them increase the prices to solve problems, and we've seen the market increase in the midst of increasing interest rates. But it is typically because of what's associated with those interest rate hikes that causes the fear, that causes something else to be going on behind the scenes instead of it just being interest rates. So as a buyer, as a seller, as an investor, you have to read between the lines of what's going on with the Federal Reserve. You have to find out and interpret, why are they doing what they're doing? And then after you've gotten your answers, you've done your research, you've watched the news, you've seen if this is a bunch of just fear mongering or if this is really legitimate, then you got to look at supply and demand. And supply and demand is the true indicator whether you're going to see decreases in home prices. So let's take a look at some of the graphs here. Now, I just showed you this one right here, and that's months of inventory. And I want to show you what's going on right now in 2022, the beginning of 2022, for us to make a determination, are we going to see home prices drop in the coming months with what the Fed is doing? So right now, we're at an all-time low with interest rates compared to where we have been, okay? The other thing that we need to look at is actually new construction. How is that playing into this? Because with new construction, they're building based on demand. And as an economy, we need new homes. And so here we have homes back in 2021, the amount of homes that were built, homes that were permitted, and homes that were started. And here's what I really want to show you is right here. You can see that the green line represents those new construction homes that were completed. And back in 2016, we saw just under 1,100, I'd say. 1,100, this is thousands of units, so it's 1.1 million. And today, we're just over 1.2 million. But the thing I want you to correlate is permits were over 1.8 million, but only 1.2 million were actually completed. This disparity, this difference right here is due to what we've seen with our supply chain issues that we've been having due to COVID and Omicron and all this other stuff. They haven't been able to get the supplies needed to complete their jobs. So we've had this huge increase in demand. That's what this tells us. Permits is based on demand, but we're still lagging behind in the completions. So demand is very strong. We see inventory really, really low. And the next thing that we need to look at is buyers. What kind of buyer do we have? And here we have buyers. This is based on buyer traffic and with the traffic index. And this is the United States. So based on this, very strong is the dark blue. Well, or strong. It looks like most of this is strong in the United States. So buyer traffic is strong right now. It's not weak. There is more demand for homes and the supply is very, very low. So with all of this being said, here is really what I expect. If we only see interest rates increase and everything else stays the same, we don't get the fear-mongering of more inflation issues and all of that, I expect home prices to stay where they are, maybe level out a little bit over time. We probably are not going to continue to see 10 to 15% year over year like we have been, and that will level out to the average of my guess is anywhere from 3 to 6% over the next few years if nothing changes. Now, if we don't get the inflation issue under control, or the way the Fed is actually doing this for the tapering does not manage this inflation issue, well, that could be another conversation. They may respond in a way that's drastic that could put additional fear in the market. And if fear enters the real estate market, more than likely demand for homes will decrease. Demand for buying a existing home or a new construction will decrease, which will in turn increase the supply, and in return you have sellers competing against other sellers for the few buyers that are out there. Now, that is still yet to be said, and we will find out here in the coming months on what's going to happen. But if you appreciate insight like this and you like this content, I would greatly appreciate it if you consider subscribing, like the video. I greatly appreciate it. Guys, thanks for watching, and I look really forward to seeing you guys in the next video. Take care.